I'm Charlotte McLeod with investingnews.com, and here today with me is Lobo Tiggre, CEO of independentspeculator.com. Good to have you here. Thanks for coming.
Glad to be back on the show, Charlotte.
Really good to be checking in with you. We did just talk at VRIC. It's just, I think, a little over a month later now at PDAC.
And how the world has changed.
It has. Although, okay, so one thing that we talked about at VRIC was how busy this show was, and I think that you felt that the people there were ready to buy mining stocks. So I wanted to check in and see if you're getting the same feeling here on the show floor.
Absolutely not. And I don't know if it's the foggy Toronto weather that's depressed the mood here, or if it's uranium taking a breather, because at the time, it wasn't just everybody's buying all mining stocks. Uranium was definitely the buzz of the show in Vancouver. And uranium deals, uranium stocks, the uranium price going vertical at the time, that was the buzz. And now, lo and behold, it's corrected. And, the gold stocks are still not getting any love, so maybe people are a little bit glum on that score. Of course, I see that as an opportunity.
Of course. And those are two topics, gold and uranium, that we will go deeper into. Where I thought we could begin, though, is with gold. And we're speaking on March 3rd. It's a Sunday. This past Friday, we saw gold take off. And we're kind of on a cliffhanger now. And we won't post this interview as soon as we possibly can, but it won't be before Monday, unfortunately.
Before the price is chased on it.
But I did want to get your thoughts just with that caveat. So some people seem to be thinking, okay, this is it. It's time now for gold to go higher. And others are thinking, no, not yet. So just a general sense from you maybe on what happens and what could be next.
Well, first, let's take a step back. And okay, you say, we have a new nominal all-time high in gold, and seems like this big breakout. But we've been trading close to that for months. I mean, gold has never been at 2,000 or above on, so much, before at all, and let alone staying there for months. Which, by the way, is very good news for the better gold miners, right? And they should be printing money hand over fist at these prices. So the current quarter should deliver some very interesting financial results. But to the point, though, it's like, this isn't this huge breakout. It's like $40-$50 move. It wasn't, $200 in a day, or it wasn't a Bitcoin-style move. It was actually a fairly ordinary uptick for gold, starting from a high base. So for me, the significance here is, new nominal all-time high. And I keep stressing that because a real all-time high would be, like real not as in real, but real as in adjusted for inflation, would be over 3,300. So this isn't really an all-time high. Anyway, so I don't see this as a huge breakout. I just see it as notching a little bit higher in a trend. And in some ways, that's actually a good thing. If it had just gone like this, then me, last time we spoke, I'd be saying, hey, after a vertical rise, it would make sense to look for a correction, a bit of a pullback here. So I see this as more stable. And the exciting thing for me, and the audience, if they're familiar with our talks, they know, I'm not to jump up and down and pound the buy button. But I'm very excited this year because we're going into a circumstance where, with or without my hard landing, which I still expect, we've talked about, the Fed is expected to cut. The Fed itself is saying it's going to cut. And rate cuts are typically good for gold. If we're going into a rate cutting cycle with gold at nominal all-time highs already, or even if it corrects, if it drops $100 from here, we're still close to $2,000 an ounce. And you go into a rate cutting cycle from that level, and that portends very, very bullish things for not just the metal, but for the associated equities. Fun? This is me being very excited.
So just because you mentioned Bitcoin, so Bitcoin also moving this past week, we have stock market indexes going upward, and we have gold also moving. And it's interesting to me because you hear things like, Bitcoin still stealing attention from gold, tech stocks and AI also stealing attention, but everything is kind of going upward. So can you help me make sense of that?
Well, the easy answer is the Fed. Right? What happened Friday is interesting, particularly interesting, because Thursday we got PCE, the Fed's favorite form of mismeasuring inflation. So And that was kind of a nothing day. Like, the markets wobbled and kind of sideways. There was no big movement on the supposedly really important economic statistic, the Fed's favorite form. That's the goalpost. Instead, nothing much, and then Friday, fireworks. Well, what happened Friday? Well, we got, decidedly weaker than expected manufacturing PMIs in the U.S., so more signs of distress on Main Street, which, we've seen for years now is good news on Wall Street. And we got the confirmation read from University of Michigan consumer sentiment, which was surprisingly negative. So, again, bad news for Main Street, and we've seen this show repeatedly in recent years. Good news for Wall Street because the Fed is expected to cut. Now, remember, until when we spoke last time, the Fed was really pounding the table on no rate cuts anytime soon, higher for longer. Powell will probably say something like that again, coming right up. But, the markets were finally starting to believe the Fed. And then after these surprise numbers came out 2 days ago, the market suddenly maybe the Fed will have to cut sooner than we were thinking. And so the rates, you can see the rates are now, there's actually 4% chance back on the table of a rate cut this month, where it was effectively zero before. 4% is not a lot, but it goes way up in May and much higher in June. In June, it's more than 50-50 that the Fed is going to be cutting. So that's H1 of this year, not, sometime later or maybe next year. So there was a big change in market sentiment of, yay, more bad news. Yay, the Fed's going to have to cut sooner. And so risk assets went up. Bitcoin is a risk asset. Though, actually, I think Bitcoin has more to do with the halving. And the new Bitcoin ETFs have helped. There is, skeptics aside, there is new money coming to the table. You made it easier for people to buy into that highly volatile speculation vehicle. And some people are taking that up. So, yeah, some money is going there.
Okay, and so you mentioned the gold stocks, and I think everybody is probably aware, if they follow you, of the opportunity that you see in gold stocks, and we've talked about this. I don't think that we have discussed together what will make them go up. I know you're happy right now because you can still find bargains, but I think it's worth asking because a lot of people are looking at the gold price and they wonder, okay, when will this actually happen?
All-time high in gold didn't do it, what would, right? I get it, right? I just gave my talk over here, and I was saying how many people think there's something broken in the gold market? How many people feel like things aren't working the way they should? Most of the audience put their hand up. But I get it. That's the sentiment. That's the bearish sentiment we've been struggling with for more than a year now. But I actually think that Friday was the proof of the pudding. That gold stocks moved Friday. So, okay, they didn't hit new all-time highs as well, but they did move. They've been you'd think they were knocked out on the mat of the boxing ring and they couldn't get up. But they picked themselves up Friday, the good, the bad, the ugly. I looked at a whole set of them. And it wasn't just, the biggest names in the space that immediately got a bid, though some of them did well as well. It was mid-tiers, it was juniors, it was explorers. The lot of gold stocks did really well. And that's what we want to see. So I'm not saying, this is it, we're off to the races, D-Ron. It's go out and buy right now because it's straight up to the moon. We don't know that. As we said, this wasn't this huge breakout. It's more of a staggering higher as we go. So I think this is actually good news for the buyers. But to answer your question, what would make it go? I don't think it's just a new nominal high like that. I think, though, that the fact that we did see the stocks move begins to indicate the answer to your question. So more of that, bigger of that, more consistent of that. So if we close not just a few pennies, but significantly over 2,100, and we do it not just for one day, then if 2,100 is the new 2,000, then at some point, all these people who are thinking that gold has spiked and has to go down, at some point, they have to realize, you know what, it's not going down. It's putting in higher highs. It's building another plateau here at an even higher price. So basically, I'm looking for bear capitulation. And we haven't seen that since 2020. The bears have really been a dominant force. And I can't blame them. Recency bias being what it is, and the history of gold spikes being what it is, it spikes and it comes back. The bears are not wrong to look at gold's track record and say, you know what, going up to 2000, it should go back down. Like historically, that's what you would expect. But I do think the game has changed. I don't think it's 2011 all over again. And I think when people realize that, when the bears capitulate, we will see not just the gold stocks finally, catching up with gold. I think they'll more than catch up. I think we will see, if not a mania, maybe it's not NVIDIA scale mania, AI mania, but I think we will see a lot of money pile into this space and substantial gains for long-suffering gold bugs out.
Fingers crossed. And you mentioned the gold producers should be looking quite good in the coming quarters, but I think most of them, if not all, have the better ones. Okay, we've gotten the results though for 2023. So how did those look to you?
2023, we're still ramping up. I think. Well, and there's bigger producers, there's mid-tier. I mean, there's junior producers, so not all producers are alike. And even some of the bigger players have had idiosyncratic is the word we like to use in financial media these days. Company-specific issues holding them back. So it's very much a stock picker's market. But it's not just that they're unloved for no reason. A lot of them have struggled with cost blowouts, higher OPEX, missing guidance. And the last big bull in gold is funny. The companies kind of went nuts with buying ounces but let's say with less due diligence on the quality of those ounces, just get more ounces on the books, and they got rewarded in the up phase for buying gold juniors that had a lot of, multi-million ounces, right? And then afterwards, it turns out a lot of those acquisitions weren't so great, and the big players got taken behind the woodshed and taught a lesson on that. So this time, they're not doing that. We've seen, I think, much less M&A than you would think at $2,000 plus gold. Where's the M&A? Well, management got pounded for getting carried away with the M&A last time, so I think they're being more judicious this time. So instead, they're making a different set of mistakes. And sorry, but there's been a lot of underperformance. And, more power to it. There's a smaller number of companies out there, instead of promising the moon and then failing to deliver, they underpromise and overdeliver. So if there's a happy takeaway here, dear audience, is that you've got a bit of a litmus test. This bearish sentiment is sorting the wheat from the chaff. You can see which companies are over-delivering, and that's a very good thing. One more thing. Sorry, this is not happy news. It's on my mind because I just talked about it in my presentation, and that is, in this world of passive investing, there's ETFs now, not just an ETF where you can buy the underlying commodity, but if you don't feel confident in your own ability to pick the right ones, you can buy a miners ETF now. No, just wasn't there 20 years ago. So you can, offload that decision-making on somebody else, and you do more or less okay. The ETFs do track the underlying commodities. And I think that is a challenge for particularly the major producers. Even the GDXJ, supposedly junior, those are all billion-dollar plus companies. They're not all, but those are not tiny juniors. So I'm not saying that the miners won't perform. I'm just saying that they have competition now that wasn't there before. And so maybe expectations should be moderated in that.
Okay, I think we'll leave gold there for now. We'll see how it turns out tomorrow. I'm very interested to see what happens. Then we will move over to uranium. So another big topic that we usually go over. So like I had mentioned, we talked back at VRIC, and you reminded us that it tends to be a 2 steps forward and a 1 step back. But you've also told us, it's putting in a floor at about $100 per pound, which we have gone below. So maybe get your updated thoughts on uranium and how we should be thinking about the price right now, or how we're thinking about it.
Well, the answer to both questions is actually pretty similar. If it's natural after something goes vertical to expect some correction and consolidation, and lo and behold, here it is. That's just the market behaving the way it usually does, if not always does. So no surprises. For anybody who listened to me, didn't send me all that. Hey, I got so much hate for saying that. It was the flavor of the moment. People were so excited. I was told that later that it was like my fault that uranium corrected for talking it down. I I wish I had that power. If I could only control markets with my words, boy, but I'd be a much wealthier wolf. But anyway, so this is markets doing what they do. I did say that it seemed to me that uranium was building a floor at 100, and we've gone below that. So, I was wrong. But you know what? If the incentive price that we were looking forward to for years was $70, $80 uranium, and gold's fluctuated from 106 to 96, I'm not worried. We're well above the incentive price. If not at Vancouver, but when we spoke in New Orleans, I was happy to see uranium breaking out as I expected. I was already starting to sound the warning, hey, this is great, but nothing goes up forever. And at the time, there were some people like Justin Huhn, whom you've interviewed, who were saying Kazakhstan is not going to be able to live up to their expectations, and this is very bullish. And I think all respect due to Justin, is he nailed it. But we hear experts telling us these things, and until we actually have the proof in the pudding, I'm cautious about putting too much weight on any experts' predictions. So I wanted to see the proof in the pudding, and we got it. So after New Orleans, then we started seeing the uranium go up. And then after Vancouver, that's when we actually got Cameco and Kazatomprom report. And both of them reporting struggles with production. One of them slashing guidance, not the other. But still, both of them reporting significant production issues. And Justin was right. So this was a real game changer in my view. And as your audience who's listened to you and watched us talk before will remember, I said, okay, uranium was my highest conviction trade for 2023. This year, 2024, it's gold. So I'd moved. So because Justin was right, because we're seeing the proof in the pudding, and even better yet, because we've had a correction and so there's opportunities on the table again, I'm putting uranium back on the table again. I'm actually as bullish again now on uranium as I am on gold for this year. I think both are going to do really well. That's what I mean by game changing. That supply that isn't going to be there this year by itself is a game changer. And then remember, it's not just the slash guidance. Kazatomprom actually produced less uranium in 23 than it did in 22. So who knows if they'll even be able to produce as much this year? We'll see. As far as we know, they're working on solving their problems, but they haven't yet. So this is really, really bullish. Again, this is the equivalent of me jumping up and down, right? This is exciting. I have changed my tune. I put uranium back on the table as things that I'm looking to buy because of this development. It was very encouraging. So the good news is, uranium has crashed all the way down to the mid to low 90s. Well, if you missed uranium last year, that is very good news. And okay, can it go lower? Yes. I don't know when this correction bottoms, where it bottoms, or how long. But I see it as an opportunity already. If I had no uranium stocks, I would go out next week and buy some. Since I do, I'm being more selective. I'm looking to see where, if I had bought higher, if I could average down, I would go there. If not, I would wait to see how much lower it goes, see where we put in a bottom, maybe that. As is, I'm mostly focused on seeing if I can find a quality uranium play that got away from me before, that now has come back a little bit, because that would be very interesting to me.
Probably good to be here than with all the companies. There you go. Yeah. And okay, maybe one more question on what's going on with the price. So we've established that it wasn't your comments that have led to this. It wasn't you. Yeah. So, but then I think we should look at what is it? Is it just because it went a little bit far and it has to come back down? For me, when I was seeing this happening, it seemed to coincide. People didn't seem to like the Cameco results, and I was kind of putting those things together in my mind. But for you, what is the reason behind what's going on with the price?
The correction didn't really coincide with my view. And if anything, the Cameco results were an argument. Like Cameco itself went down, but uranium went up at the time. Because part of what Cameco said is, yes, we're going to continue hedging and we're going to be buying in the market. And, that's the right thing to do. And people didn't like that at all. They're uranium bulls, like, why would you hedge? It's going up. And to be fair, and I don't own Cameco. I'm not recommending Cameco. But this is why Cameco survived all those years when when you had $18 a pound uranium. So I can't fault management for saying, yes, we're hedging, and yes, we're going to continue hedging. Yeah, things look great now, but what if there's another Chernobyl scale event, right? The existing nuclear power plants will still need fuel, but if the stock market goes to, right, it'll be Cameco's contracts that keep that company alive. Even if the rest of the industry withers up and blows away in the wind, Cameco would still survive because of this thing that people are giving them hate for. So I don't hate Cameco at all. I think management's doing the right thing for a company of that size, which isn't even just a miner anymore, like vertically integrated and all that stuff. So I just, stop wasting time hating people, guys. Look for opportunities you can love, and just don't like that one, just leave it aside. I've lost track of your question, Charlotte. I got distracted with the Cameco thing. Oh, the timing, right? Or why? But why? 106.50 or whatever it was, that was a lot. It really had gone up. I was early in saying it would correct, but I was right. I don't think it needed a proximal cause. It can be the straw that broke the camel's back, can be anything. That straw isn't important. It was the fact that the camel was overloaded that was important. So correction was to be expected. We got one. No big headline. I absolutely see that as an opportunity. Don't know where it bottoms, but if I wasn't long already, I would see this as a buying opportunity now.
Okay, and I think that sorts that out quite nicely. I have one more question on Cameco. I did have a pretty interesting discussion with Justin about Cameco and everything that was going on there, and it's made me kind of start thinking about, all right, so the utilities are back in the market, they're buying, companies are signing contracts, and it made me start thinking about what investors should look for in terms of those things, and I know that's one of the parts of the market that is quite opaque, but do you have any thoughts surrounding that?
It is, frustratingly opaque, but we are seeing indications. Like we saw another junior, and I won't name it, but they said they were signing contracts now in the high 70s to high 90s, like almost $100 range, long-term contracts. And so, okay, that's not triple-digit prices, but it's close. In the high end, that's very close. So if a company right now is able to sign a contract for up to $98 a pound, that's really good, especially if your all-in cost is like half that. And so, frustratingly opaque, but we are starting to see reports like that. And then after the fact that you look in their quarterlies, so you can work out, what they're actually getting per pound. We'll see that. But oh, by the way, Cameco itself, since we have mentioned that one, they are talking about triple-digit pricing in some of their contracting going forward. The fact that buyers are willing to have those conversations with them. So if anybody's looking at that chart, right, the uranium chart rolled over, it kind of wiggled and went back. It looks a little bit like a McDonald's sign at the top of the chart, but now it's really dropped off sharply. If anybody's looking at that and thinking, oh my gosh, that was it, that was the peak, it's going down now, big time, it's going to crash, whatever, could happen. I can't promise that it won't, but I can tell you that if Cameco is having serious conversations with buyers at triple-digit uranium prices, that I'm not worried about uranium going low on.
Okay, so I'll let you go in just a moment, but to sum up, we've got gold, we've got uranium back on the table. Usually we talk about now things. Are there any other nows at the moment? Oh, no.
Forget about inevitable or imminent. I want happening now. So the answer is no. Actually, right now, it's just the two yellow metals. Okay, it's uranium oxide. It's not a metal in that form. But anyway, just those two. My two favorite things of what to look for next, though, once the recession is either I'm wrong and there's no recession, or I'm right and it's in the rearview mirror, the very first things I'm looking at are oil and copper. Because they're absolutely that's as close as a sure thing as I think there exists in resource speculation. Both will come screaming back. Copper might be a little bit more downside resistant. Oil is more volatile for some reason, but both could be in for more pain if I'm right about the recession. And if I'm wrong, I don't think either one is going to take off tomorrow. So in that, the risk reward makes it prudent, I think, to wait and see if I'm right. And if I am, then we'll have great opportunities to buy bargains. And if I'm not, we might have to pay a bit more, but there'll be plenty of time to make money as the prices go up again.
Okay, I will save those ones for a future conversation. I don't think we've ever really touched extensively on oil, so that will be interesting. But thank you for coming by today to go over the gold and uranium.
Well, thank you, Sean.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Lobo Tiggre with independentspeculator.com.